Es un honor estar aquí compartiendo el escenario con estos titanes que les están hablando. A mi amigo Boo, ya lo oyeron, y a Forrest, son unos jets de combate. Es impresionante lo que esas personas pueden hacer. La cantidad de conocimiento que tienen, que hay y que están dispuestos a compartirlo en este escenario para que todos crezcamos. ¿Por qué Chasing Alpha? Porque queremos generar riqueza, queremos generar un mercado de capitales sano, queremos traer inversión y queremos ser esa comunidad de fund managers en la región, en Centroamérica, en Dominicana, en México, para que encontremos vehículos para generar más riqueza. Eso es lo que tenemos que lograr y traer. Nos preguntaban el otro día, pero muchachos, ustedes están muy abiertos y le cuentan a todo y ¿qué pasa con las ideas? Las ideas geniales valen 10 centavos la docena. 10 centavos la docena. Una idea ejecutada puede cambiar un país. Vamos a hablar de los mercados de capitales, vamos a hablar un poquito de cómo traemos esta riqueza, de cómo podemos invertir, de cómo podemos transmitir este conocimiento y cómo podemos generar más valor. Alfa es lo que se paga por el riesgo. Nuestro trabajo es minimizar ese riesgo y devolver el retorno más alto posible. Un fund manager no puede hacer dinero si no le hace dinero a sus inversionistas. Hay que generar riqueza. Y esa es nuestra misión. Por favor.
Muy bien. Antes que continuemos entonces, quiero darle también la bienvenida a este gran conferencista que nos acompaña el día de hoy. Él es fundador de Prime. Barclays Hedge nombró a Prime como el mejor fondo largo-corto y su cartera larga ha superado a los mayores fondos mutuos en los últimos 16 años. Por favor, un fuerte aplauso para también nuestro conferencista de momento, el señor Pouya David.
Gracias. Thank you. Thank you.
David, my dear friend, it's an honor to share this stage with you. We talk a lot about what you do and the amount of value that you have generated since you decided to open your fund. And let's talk a little bit about that. I would love for you to share that story because I think it's inspirational, you know, the way that you have been building wealth above the market every single time and how you've delivered these steady returns
Yes.
year over year. So that's impressive.
Yes.
So welcome to your house.
Thank you so much. It's great to be in Guatemala and great to be here. The background of how we kind of got started was through an operating business, and it was a family-owned operating business that was in the copper wire distribution and manufacturing that grew very, very extensively and started with almost nothing, as we were discussing in the Middle East, and I think that that's a very important beginning step because a lot of these investments and the best way to really analyze and understand these operating businesses, even public equities that we invest in, is by really understanding the fundamentals of the companies that you're investing in, right? And it seems quite obvious, but when you're investing in public companies, what tends to happen is that you lose sight of the fundamentals and you get more involved in the daily movement of the stock as opposed to really understanding the premise of what you're investing in, right? So basically the background is the family office business that then translated into the real estate world with a very long-term mindset, mostly investing in Southern California, Beverly Hills, Brentwood real estate, and with a very long-term mindset. Again, we've never sold anything that we bought, and then we've transferred that into investing in public equities. And to the point that you were making, each dollar invested when we started about 16 years ago is worth about $23.50 versus being worth $6.50 invested in the S&P, right? And the way that we've been able to do that is really digging really deep into these companies and understanding and valuing these companies from a very simplistic, long-term mindset and perspective, right? What does the business do? How's it operating? Who's the management team behind what they do? And what's the value of this company going to be over the next 2, 3, 5, 10 years out, right? And that's really the best way to invest, because if you're day trading or if you're looking at this at the market as a short-term vehicle, you won't be able to dig and kind of find these golden opportunities that are readily available.
You mentioned golden opportunities. That's the reason I chose, we were discussing with Jim earlier today, and I told him the reason that the first fund I ever launched was real estate is because it's a very secure asset class. So the risk that we can manage, it's really a matter of finding a good opportunity and deliver it better. But then you translated that same mindset, and once you told me, it kind of blew my mind, because the same long-term mindset of a real estate investor, you translated that into the equity markets. The equity markets are public equity markets, and that has a lot of value. I mean, because usually people, it's in vogue to invest short-term investing, try to make the quick buck. I would love for you to share what you shared with me about the reason why you did this long-only portfolio and why you keep acquiring and that you don't sell any of your properties.
Yeah, so in the fund portfolio, it's about 30 positions, and they're in 4 to 6 different sectors, right? But very sensible type of businesses. We were able to get into companies like Chipotle at $3 billion market cap. It's worth $75 billion today, and we still think it's undervalued, right? And if you go back and you look at the root of that company and you see what they did back then versus what you see today, it was pretty evident, right? Because they were doing everything structurally correct, and the market was huge for their expansion, right? We got into companies like Tesla at $5 billion market cap 14, 15 years ago. And if you look at a Tesla, right, from that time to today, a lot of the things that we're seeing play out had already played out 14, 15 years ago, right? They were winning Motor Trend Car of the Year. You could actually go out and buy the car, right? So if you were to sit down and understand, wow, these electric cars are a lot easier to make than gas cars. They're better for the environment, right? And they're going to drive the costs down. It's faster, it's safer. Every component of an electric car is better than a gas car. And then you take a look at the valuation of the company at $5 billion compared to all these other car companies that were, 200-300 billion plus. And there was one company doing it in a much better way than 20 companies here, right? And what you've seen happen over the last 10, 15 years is that this company has been rising while all the other companies have been falling, right? And they're all in a lot of trouble because the core fundamental of how he was designing his cars and building his cars is much better than the way that a lot of other companies are creating. Same thing with Amazon, another position we got in at 60 billion market cap. And the company has gone up 20-fold since that time that we invested in it. And if you looked at it, again, the whole point of all this is if you are able to slow down and really understand the fundamental of these companies and really study them yourself at great extent, right, and think very deep. And the beauty of the public companies in the US is that all of this information that you want is readily available, right? You have your 10Ks, your 10Qs, there's quarterly conference calls. Any question that you want to have answered, you can have answered, right? And so you sit back and you really digest these companies and you think long term, and they become quite obvious.
And I would like to share with the audience all this, all the things that Pouya is talking to you about, all the knowledge that he's sharing might to some sound a little bit complicated because it's a hard lingo to learn. It's not easy. But The reason why a fund is built is because we try to get emotion out of the equation. We want to get emotion out of the equation. There was a Nobel Prize given for behavioral finance, because rationally, if I tell you guys that the trick of finance is only buy low, sell high, sounds pretty easy. A teacher of mine told me. The hard part, the reason I studied finance was because it's really hard to know when it's low and when it's high. So the rest of our knowledge goes just to establish that fact. And I believe that funds, I don't know if you would agree with this, will, I was telling you earlier today, I don't want to handle my own portfolio, because there are people that are better, their knowledge, their experience, it's way more advanced than mine, a hedge fund.
Yes.
And then what he told you guys is that the way he chooses these companies, there's a method to it, and he sticks to it. Of course, we're buying risk. Every time we invest a dime, we buy risk. But you mitigate it.
Yes.
And share the success, man, because it's amazing.
Sure. So, so we've been able to outperform the S&P by like 7.1% for 16 years, right? And for you guys, when you invest, you want to invest with someone that you understand what they're doing. Take my word for it. When something is too complicated and it makes it sound too complicated that you can't understand what they're talking about, that's usually not a good recipe, okay? The other thing is that you want to invest along someone that has a long-term track record. Something like, I don't want to scare you, but something like 90% of these funds in a short period of time turn over, right? So you want to invest with someone that you understand what they're doing, you have seen a long enough track record, right? And you can get into the mindset of how they're thinking and what they're thinking and why they're thinking what they're thinking, and read a lot about the fund that you're going to be investing in, right? And to Santiago's point, you know, if you're operating a business, or you're running your family office, or you're doing other things that you're investing in, you may not have the time to sit down and really study these companies at a very, very great extent and a great length, which it is a lot of work, right? But if you, my argument is twofold. One is exactly what Santiago is saying, is you want to invest with someone that you can trust and you understand what they're doing and you see their mindset. And the second point that I'm saying is that even if you do it yourself, don't worry, it's not to such an extent that you can't do it no matter what, right? Because it's really simple. At the end of the day, it has to make sense, right? These companies that end up doing well, when you go back and look at them from retrospect, they all had an incredible business plan. They all had incredibly good management team, right? They all had proven products that the world wanted and desired, right? And so I want to just leave that one point with you, if nothing else, which is that you know, invest in things that you understand, invest in things that make sense, and if you're going to invest with a manager, find a manager that you trust that has a very long-term track record, and hopefully is investing in very liquid assets, which we do. We only invest in publicly traded companies that have very easily liquidity, where you can get in and get out quickly. So I think a lot of those boxes we've checked. We have the 16-year track record. If you look at the companies that we're in today, you know, I'm expecting these companies to triple and quadruple again over the next 4 or 5 years. And you have to have patience as well with what I'm saying. In the stock market, you're going to have a lot of volatility, right? In order to make money, like Santiago was saying, you're going to have volatility. That's why you have to make sure that you invest with someone that has a long-term track record, you understand what they're saying. So in the short-term volatility, you could withstand to make the long-term returns that we've been able to have, right? So we have incredible returns. Again, $1 is worth about $23.50 over 16 years now. And none of the companies that we've ever invested in have gone anywhere near bankruptcy, right? These are companies that have great management teams already in place, huge revenue growth, cash flow positive, et cetera. And you know, there's these opportunities that you can find around the world, right? Yes. We live in the US, we're able to really understand and digest and check all the premises of these companies that we invest in. And you almost have to be local because you have to see where the competition is coming from, right? You have to be able to look around the corner. You have to see what the culture
Awesome
is.
point.
Please.
Awesome point. And that for you guys, if you want to manage your portfolio out there, or if you want to become a hedge fund manager, this is a very, very valuable point. You will get scared. It's scary. And we were sharing dinner last night, and the way that we talked about this is, imagine el lago Atitlán en el Chocomil. Uno ve las olas y abajo el lago está igual. The work of a fund manager is not to get scared by the waves. It's to be calm, have the method, trust his thesis, and just show it. We're in this for the long run. Whatever your investment objective it might be, you need to believe in your thesis. Otherwise, don't open the fund.
That's an amazing, amazing point. Because when we started our fund, just again, coming from the family office background and being what I believe to be a lot more conservative, is we said what we're going to do and what we're not going to do, right? So we said no options, no derivatives, no heavy leverage, right? Because if you don't have your mindset set up in advance, you'll keep changing it and you will get in a lot of trouble, no matter what you do, even in your business that you operate, even in how you manage your personal finances, right? If you're not planning ahead and thinking, okay, I'm making this much and I need to spend this much, the boat is going to tilt over, right? So especially with investing, you have to have criteria that you stick with. So one of the things we've been doing for 16 years is sticking with the criteria that we've set out. Only invest in publicly traded companies, make sure that they have a lot of liquidity in them, and don't increase the leverage up and down. Stay very conservative in how we're investing, and don't get into the options and derivatives that exacerbate leverage. We don't want to make a lot of money and lose it back. We want to make money consistently over long periods of time. The market is volatile already enough, right? But you take advantage of that volatility if you can have the patience and the mindset that Santiago is talking about, which is think about all of these things before, so you're not kind of running after your tail and being reactive.
And there's another point to it, because I don't know if in the audience there may be the next greatest fund manager on the planet. And what I would say is, how do you know when to launch? How do you know that you really believe enough in your thesis? And I liked one of the things that we learned with my friends Boo and Forrest during the build-up of my fund was, would you offer the product to your family, to your children, to your parents? Would you offer your product to the people that you care the deepest for? If the answer to that question to any future fund manager out there is no, don't do it. It's very simple when you come to think about it, because then you have a deal. And then you do this deal one time and again and again and again and again. Choose a category that you can assure, that you can lower the risk as much as you can humanly can to give the greatest return. Because that's the way we build track record. I mean, you have 16 years, you're you. but I mean, the legend, but...
Thank you. I would agree with that. I would even say that do it with your own money for the first couple years, right? And learn what you're doing and make sure that you've learned the trials and tribulations so that you don't get in over your head and that you don't, lose other people's money. It's no fun losing anybody's money, right? So you want to be very straightforward. You want to say there's going to be volatility, but your projections and your expectations will make it very well worth your time to go through that challenge. Because anytime you make money doing anything that you do, you have to think outside the box and you have to take certain educated risks, right? No one has ever made a lot of money without thinking outside the box.
Of course. And there's this thing, like fear, it feels awful. It will crunch your stomachs. Fear is good. Fear is good. I have a therapist to walk me through fear, because the first time I received an investor, I was scared to spend the money. So every time I would make an investment, I will match the dollar with my own dollar. And I was limiting growth by a whole lot just because I was scared. And scare is good. If you stop feeling the fear, stop being a fund manager. Because it's no fun losing anyone else's money.
Yeah, so just on that point, so fear is not just to be fearful, right?
No,
it's
no,
that,
yes.
it's that, and you know, Santiago, you're making an amazing point. It's so valuable to have that consciousness to look at, okay, what could go
Consciousness.
wrong? What could happen? What's the downside? Where are the crevices? Because if you do that, then when you gain confidence, it's very strong confidence.
Absolutely.
Like, in my opinion, from what I see in these companies that we invest in, when we're jumping into these companies, I look at every single angle and I have that fear of, okay, where could I be going wrong? Where could I be making a mistake? And when you do that and you find these companies, you gain such confidence because you're like, I've seen everything and I believe this company is going to go up 4, 5, 6, 7-fold, right, from where they are today, right? So that fear creates actual confidence if done in the right way, right? It's like kind of the tango of life, right? It kind of goes hand in hand. You have to be cautious, make sure you're doing it slowly, and then you'll gain extreme confidence on the upside. So when we look at the companies like that are in our portfolio today, I love it. I just sit back and I'm patient because I've studied these companies at such a great extent that I know they're going to go up, right? Because I've looked at every angle. I've seen what the other analysts think. I see what people that think have a different point of view think, right? Like when we got into these companies like Chipotle, Tesla, Amazon, you know, Activision, T-Mobile that have jumped 20-fold since we got into a lot of them. You want to know what the person on the other side is thinking as well, and that fear creates a lot of confidence. And so through that, you know, we believe that the portfolio is going to continue to do extremely well because we built it on a lot of confidence and a lot of concern of making sure that it was structured properly. And working with Santiago and through Santiago, we're making that available.
Yes.
Through that same methodology.
Of course. That's the thing. And many of you raised their hands when Frederick asked if you wanted to become fund managers. It's a beautiful world. We do a lot of good. And this is a personal question that I'm going to ask because I don't know if a fund manager out there may arise tomorrow. And this is your club. I mean, we intend this to be available to all of you guys. What we want is to build wealth. Pouya, if there was to be a fund manager out there, what do we need to do as a region, as a country? I love this country with all my heart. What would it take for you to invest here? What do we need to do to have a Pouya David and say like, you know what, guys? I'm investing, and I'm going to talk numbers here, guys. Well, I'll put in $100 million just because I can. What do we need to bring that home?
You know, from what I've seen of Guatemala and what I know, and I've done some research, there's a lot of things that are happening that are very positive, right? And at the end of the day, whether it's Guatemala or the US or other parts of South America or Asia or Europe, the secret is that if you do things right, like keep the tax rates low, like, you know, allow people to thrive in their business, right? The community will grow, and investors from outside will come to you and find great places to invest. Like some of these real estate developments that I've seen here are unbelievable. You don't even find them in the US, right? Like, you know, you have, you know, some of the greatest builder in Southern California, Rick Caruso. You look at some of his projects, and then you come and look at some of the projects here, and some of these projects are like 10 times bigger, and they're being done at a top-notch level. So the answer to the question Santiago is asking is that, you know, in my view, when you have government let people grow and thrive in their business and not try to control everything, right? People flourish. It's just the natural instinct and it's the natural mentality of people to work together and create and be productive, right? And so I think that the more that people are allowed to do that, the money will flow into the country like crazy. There's, you know, there's incredible money around the world. There aren't a lot of great places to invest in it, right? So a country like Guatemala, that's doing a lot of the right things, that can continue to do a lot of the right things, I think we'll get massive investments, right?
Thank
and
you.
people will come knocking at your door.
So valuable. It reminds me of a quote of Steve Martin, the comedian, the actor, that he said that when he was teaching an acting class, and one of the students said, "Hey Steve, what do I need to do to make it in Hollywood?" And he replied, "Be so good that they cannot avoid noticing you." So I think our job is being so good that you and your friends and my friends will notice that there is a lot of wealth to be built here, because we are the land of opportunities and the pearl of the Americas. Guys, I would like for you to open the mic to you, and if any one of you have some questions, not every day we have access to David's brain, and I would love for, please.
And maybe sell part of it and move to something else?
Okay, so great question. So first of all, the reason we're here is to work with Santiago in being able to make our fund available for people outside of the US. And I think, just as a side note on that, I think the US is now doing a lot of things much, much, much better than they were in the past. And I think that the US is going to take off extremely well, because we're seeing them do a lot of the things that create a lot of success. So, you know, organically and originally, America's been a great place to invest. And I think what's happening now is going to be a rough patch. But after that, you know, reducing the government deficit and doing a lot of the things that are happening that's difficult medicine to take creates prosperity, right? And it doesn't matter if it's in the US or if it's in Guatemala or, again, anywhere else. If you look at some of the regions in the Middle East, like what Dubai is doing, they're really following the foundation of what made America amazing, right? Is allow people to thrive, support businesses, right? And create an environment and a vitality that is, you know, that the mainframe is business, right? And it grows from there. So yeah, so that's just a little macro on your question in terms of
May I
the
just add
fund's
one thing?
availability. Yeah.
This is exactly the point that I was making earlier. You know, like, beautiful question, and thank you. The Tesla stock, if you're a mom and dad operation, if you are managing your own portfolio, Tesla is scary. I mean, 3 days ago, the market was red. It was awful, the beginning of the crash. And if you then read the news, you're dying. None of the fundamentals changed. It was just a lot of retail investors getting crushed by the market. And the thing is, fear and greed. They bought into Tesla because it's going up forever, and that's not happening. And they will sell it because, oh, I need to get out, because if I don't get out right now, I'm going to lose everything. That's the job of a professional fund manager, is to say, okay, have the fundamentals of my investment in Tesla changed? When Pouya, you entered Tesla at what? Nothing.
Yeah, I mean, we got into Tesla at 5 billion market cap, right? And your question is a great question, and it everything kind of weaves back into each other. So let me try to answer it in a couple points. So first of all, when we structured the fund, right, we said we're going to have strict position size limits. So we don't allow any company to grow past a certain point, right? Right now we have 30 positions long in the long-only portfolio. We also have a long short that also has 30 positions short. So if you say, okay, I'm not going to have options, I'm not going to have derivatives, I'm going to have 30 positions, right? And I'm not going to keep changing my leverage ratios, you've already built in stability. Now the question is, are you a good fund manager? Are you good at understanding these operating businesses, right? And you've created a structure that no matter what the market throws at me and us for the last 16 years, we're going to be around, right? That's just the core way that it was set up, right? We may not make as much money tomorrow, but I don't care. I want to make sure I'm around 2 years, 5 years, 10 years down the line to prove my premises. In relationship to your question about Tesla, and these companies are all these companies are complicated until you really understand them and are able to simplify. So I would say this, Tesla at $5 billion market cap is not the same as Tesla at $1 trillion market cap, right? So it's always understanding the value and not being married to a position, right? I'm not married to any position. If you give me the right company at this price and you change the market cap up and down, at some point I will sell the company and at some point I will buy the company. You can't just say, oh, I'm going to close off my mind. And a lot of investors that you speak with, you'll ask them a question, what's the stock price of this company? 90% of people know. What's the market cap of the company? 70, 80% of people don't know. How do you invest in a company if you don't know what the market cap is, right? It's like, I love this house, but is it a $1 million house, or is it a $25 million house, or is it a $50 million house, right? So what I'm saying is that a lot of the way that Wall Street was built was buy, sell, buy, sell, buy, sell, and move very quickly, and it's this stock price. Don't listen to that. Slow down, do your own research like it seems like you're doing by asking a great question about Tesla, and really look at the fundamentals. Hey, what's this company worth, and what do I think it's going to be worth in 2, 3, 5 years, and why? And I'll give you an anecdote as well. So when you have a theory and it falls well within reality, that's a good sign. So if you look at the US public equities market, there's been about $40 trillion of money made in the last 50 years. Okay, give or take a couple trillion, right? But less than 1 in every 300 of those public companies have created more than half of all that wealth. So some of these companies, when you do the research, are so incredibly undervalued that if you really study them well and you have a good business sense in your head, it's not really understanding these words and jargons that you don't really know, because at the end of the day, these are operating businesses. So if you have the mindset of really digging in and asking the questions yourself that you're asking, then these opportunities just kind of shine out at you, right? And there's thousands of stocks, but some of these stocks, if you keep doing your research, they'll pop out at you. So like I'm saying, even today, our entire portfolio are companies that I've found these golden gems, and I think these companies will go up 4, 5, 6-fold, right? Yes. With very little downside risk, in that they're strong operating business, great management team, proven products, and they're not AI related, that tomorrow you're not gonna, you're gonna wake up in the morning and say, what just happened to my investment, right? And we just take a long-term gain and game and mindset, and over the next 2, 3, 5, 10 years, that's when you become very happy and you actually enjoy the process.
That's like a good marriage.
Yeah, a good marriage.
No, I'm going to share with you another question, otra pregunta. I want to share a gift of the many that Pouya and all the friends that have been speaking before me shared with me, and it was challenge your assumptions. The model may be good, challenge your assumptions. Just challenge what you suppose it to be true. If you challenge that in your models, you will have a robust model. David, this is not only a pleasure, but it has been an honor. It's been an honor. Es un honor hablar enfrente de todos ustedes, al lado de mi amigo. Bienvenidos, y les quiero pedir algo. Esta es mi petición, my call to action. Atrévanse. Bienvenidos. Hagámoslo juntos. David, I want to bring $1 trillion to this region. And I ask you in the audience, help us bring enough capital markets into this region. Let's grow like Singapore. Why not? If we stop with our mentality of stop sharing, oh, I have this idea. If I tell someone, they might steal it. Who cares? Just build it, and let's generate wealth together. People, thank you very much for your attention. David, I have no words.
Thank you.
Thank you.
So much.